a few new folks on the call tonight, especially Colorado is in the house. I do want to give you an update on where we stand with our National Infrastructure Bank bill. So I'm going to do a little bit of review. Apologize for some of you who have seen some of these slides before, but I wanted to let you know where we are. Our bill in Congress, HR 3339, before it expired at the end of last year, we were able to bring on 20 co-sponsors onto this bill. And a large chunk of these co-sponsors came on after the bipartisan law was passed into law and everybody realized that it was going to be too small to do the whole job. And especially as legislators in different states came and talked to their members of Congress and convinced them that we need this bank and this bill to build up all of our nation's infrastructure. It'll create a $5 trillion public bank to lend for infrastructure projects all across the country. And I wanted to give a real quick review on how the bank works. It uses the Hamiltonian method to get itself started. It goes to the private sector who are holding treasuries and ask them would they like to sell in a small portion of them into the NIB in exchange for preferred stock. They would pay these investors a little bit extra. In exchange for this guarantee, they would be silent partners. They would be holding preferred stock and they would be silent partners in the bank, but they would get a guaranteed extra rate of return that would come out of or be paid out of the interest earnings from the NIB's loans. Plenty of money left over to meet the bank's other operational needs. That is, this bank is self-sustaining and doesn't require infusions from a budget to get it started. And then that capital will sit on the bank's books, acts like a rainy day fund. All banks are required to maintain capital of $1 in capital to $10 in loans they give out. So that's how we capitalize the bank. And this is how the bank actually gives out a loan. It works exactly like a commercial bank, uses the same accounting software and everything that a commercial bank uses. Each time the NIB creates and books a loan, it creates a deposit on the other side of its books. It's a feature of its automatic accountancy methods. And then when you create a deposit, you're actually adding to the nation's money supply. And then it uses cash on hand coming in from other deposits to move money out of this deposit and circulate it around into the rest of the banking system. So that's the loan process. The loan terms will be very advantageous. This is a public bank. We want to keep financing costs to a bare minimum. So the bank would be charging around the Treasury bond rate for interest charged and flexible repayment terms. And then borrowers would be any state or local government entity, including a cooperative or a housing authority that can come in directly to the NIB and request a loan for the project that it wants to get financed. We'll cover $5 trillion in projects over a 10-year period. We know that we have this need from the American Society of Civil Engineers, who have estimated that's how much we need over the next 10 years in additional new money above and beyond what budgets are providing now to repair our transportation systems, our water systems, and upgrade our electric power grid. In addition, we added a few categories of our own we think are also critical: a complete high-speed rail network all across the country, broadband everywhere to get this out into rural areas and underserved urban areas, and affordable housing. We're the only bank that we know of, or the only source of financing we know of, that will fund 7 million new affordable housing units. And by that, we mean housing units that are targeted to the very lowest income earners who need them the most. And then large-scale water projects to address drought in the Southwest, where we grow half of our nation's food supply. So let me just give you one example of how this might work for a given state, and I'll choose Colorado just to give you an example. We want to fix all the local roads in that state. We want to make sure that we fix all the bridges, put in new water systems where they've reached their lifetime of their usefulness. We want to make sure that the electric power grid is hardened. We want to build out high-speed rail to connect the cities all along the Front Range to each other to promote economic growth. We want to get broadband out everywhere. Affordable housing. The state needs at least 300,000 new affordable housing units, and we can build that as well. And then we want to make sure we take care of the Colorado River system. which is providing electricity and water distribution to 40 million families in 7 different states, and it is running bone dry. So we have a proposal, just one of the things that this $400 billion in dollop of money can finance is a project to take water from a river, an offshoot river of the Mississippi called the Atchafalaya, and pump it all the way up into the Colorado River Basin and fill up those aquifers really quickly. That's just one example. So what we know is that our bill is 10 times larger in terms of providing new money than the bipartisan infrastructure law that passed last year. Every single state will not be able to get everything that it needs from the bipartisan law to fix its roads and bridges and build up its transit systems and fix all that water infrastructure. We're going to need the National Infrastructure Bank to top up the other 90% of the financing that's still missing from the financing picture. And there's one more thing. We could be heading into a recession in 2023. Some of our other speakers are going to talk more about this, but already we've seen signs that we're heading into the recession. We've seen stock market crashes. Inflation is falling down. Manufacturing is way off from its peak in 2021. Even though we have a tight labor market, we still have a lot of folks that are out of work. And just yesterday, the Federal Reserve announced that it will continue to raise interest rates in this coming year, maybe up as high as 5 or 5.5% for the money that it lends to banks to on-lend, and hopes that rates will stay there. It wants to really clamp down on demand. It thinks that's the way to solve inflation. We think that's the wrong idea because it's going to crush small and medium businesses. It's going to torpedo again local finances. It could even disrupt the banking sector. And we've already seen that the stock market and your 401ks are down. So we have another plan to use our National Infrastructure Bank to lean against this recession. How does that work? When more people become unemployed as a result of this reckless Fed policy, we can hire them into the National Infrastructure Bank, train them up, put them into apprenticeship programs so they earn while they learn right away, and build out all of our nation infrastructure. We'll be hiring locally and training locally, and that'll provide jobs for people locally to fix our nation's infrastructure. So we want all of your help in getting this bill passed in 2023. Thanks.
Thanks, Altheka. I do